What's up YouTube? This is Foxtel Digital coming to you again with Black Girl Stocks, and this is another segment of our top 3 option plays this week, where we're just going to go over a few different trades, stock fundamentals, and different strategies that you can do to make it through. Okay, but first, if this is your first time watching this video, please make sure that you click that thumbs up button. It really helps the channel. Also subscribe, click that notification bell so that you get notified anytime I upload a new video for you guys. All right, so just a quick recap on last week's plays. Okay, so we were overall bullish on ABT at 128.72 with the new weekly COVID testing requirements that they were talking about having. We're still uptrending, but there was a drop in momentum last week and now it's at 126, but this is definitely gonna be more of a long-term play. So make sure that you keep an eye on this stock and just stocks in this sector period. So we were pretty bearish on AMD. We were looking at it at 105 with the overall chip shortage and with it being in a downtrend since August. So you'll see that it actually fell to $103 on Friday. It wasn't a huge move, but it definitely is following that trend that it's in. And lastly, we were pretty bullish to neutral on Disney at 184, and it made a little jump up to 185, but it's definitely showing that uptrend is starting to slow down. So you'll kind of see that momentum is slowing, but it was pretty close to its previous high at around 189, 190. So we'll see if it continues on that uptrend. Right now it's kind of side trading, so we'll see what happens with Disney. All right, so the first play for this week is going to be FDX. That's FedEx. Everybody knows what FedEx is. You see them all the time. You get your mail from there. But right now it's trading at $255.22. And we actually found this earnings play on Tiblio. So I know a lot of you guys already use Tiblio, but if you haven't heard of Tiblio, make sure that you check it out. I have the link down below. But it's basically just a platform. They give out daily option plays and they update it every few minutes during the day. So make sure that you check them out. And then also make sure that you use my link so that you get 20% off of your first month. Okay, we've talked about earnings plays before, and we already know that we're going to be looking to benefit from the implied volatility crush that happens after the anticipation dies down after earnings. FedEx is going to have an earnings report this upcoming week, so next week on the 21st during the after hours after the market closes. So there's a lot of interesting speculation going on with FedEx right now. The biggest news with FedEx right now is that they just had an announcement that they're going to hire 90,000 new essential seasonal employees, say that 5 times fast, so to get prepared for the holidays that are coming up. So that's actually 20,000 more than the number that they hired around the same time last year. So last year they only hired 70,000. Now they feel like they need 20,000 more to keep up with the mail because of the rise in online orders and social distancing pandemic. So why would this, why would investors care about that? Well, a lot of analysts are considering holding off on buying this, and they're kind of wanting to know how is this going to affect profit margins with higher labor costs. So if you look back in 2020, you're going to see that the charts were very bullish around this time and they had some really high earnings beats. And so you'll just kind of see how they're getting less and less earnings beats. So they're still beating the earning estimates, but it's starting to decrease. And so now, we have a new one coming up and you'll see that we are currently in a downtrend. So we'll kind of see what happens with that. But of course, this is all going to be speculative. And then even with these new positions that they're having, they're looking to have more specialized roles in logistics, data science, and engineering. So that could really be good long-term for the company. But as far as short-term goes, you can see that it's clearly in a downtrend right now. And after, recent earnings, it really hasn't moved much. So going into next week, look at the options. You'll see that the implied volatility isn't too high, so it's around 50, 40. That's not terrible, but these prices are a little bit high for me. Okay, so I don't know what you want to pay, but this is looking kind of high. So for me, I would probably say a call credit spread will probably be best during this earnings. So you already know when you have a call credit spread, you're going to sell an option a little bit higher than where the stock is, and then you're going to buy one further up, and with that you're going to receive a credit, and as long as the stock does not touch your strike prices, then you would be profitable by expiration. Okay, I would want to pick an expiration after the earnings, so the September 24th would be okay for me. Go down here to the vertical. All right, so you'll see here, you know, the further out you go, the less money you get, but it'll be, you know, safer for you just in case if that stock just shot up. And always make sure that you press sell, that it's in the sell for the call credit spreads. So here, the most that you'll get with this is gonna be $56. That's gonna be your credit. The most you can lose is almost $2. So honestly, it's a little bit high, but you'll see it's in a downtrend, and you know, we'll just kind of see what happens and profit off of that implied volatility drop. Okay, so that's something that you can do with that. Wow, look at that. The next option play is going to be LEU, and this is Centrus Energy Corp. Right now it's trading at $36.77, and a huge, it's a big price difference from FedEx, you know, because it's only $36 a share. But don't let that fool you, because these option prices are still high, and we'll get to that in a minute. But yeah, Centrus Energy is in the uranium sector, and a lot of you guys have been requesting for stocks from this sector. If you look on Webull, this sector alone is up 46% in the last month. All right, so you can kind of see clearly how that reflection is showing in the stock chart. You can definitely see that huge price increase. You know, the trend is definitely your friend if you're into technical analysis and short-term trading, but you know, you can kind of see that the uptrend is kind of starting to slow down. Just looking at the candlesticks, you can kind of see this, you know, engulfing candlestick on the day. And then also looking down at the MACD indicator, it's looking like, you know, it had a recent crossover there. So we'll see what happens with that. And then you'll also start to see with the ADX indicator that uptrend is kind of starting to slow down. Moving into a closer timeline, you're going to see that actually we are in a downtrend that kind of started to formulate last week around Thursday after it hit that high of 39, but that could just be a healthy pullback. Okay, yeah, so you can see if it tests that 50-day moving average, that's this white line here, so just crossed back above that. So you know, we can see how that uses that line as support and continue upward in that uptrend that we've been in overall long term. So right here, going into the options, you'll see that we have really high implied volatility, and you know, some of these options are a little bit high. And then just going into next week to see, honestly, in my opinion, if you were going to see if it was going to continue in that downtrend, I would want to see it drop below 35, because that would kind of be a good indication that it's continuing downward. But if you kind of see that price break above this 37-38 zone, then that could be an indication that is, you know, coming out of that short-term pullback and continuing upwards. So I'm still overall going to be bearish on this short term, so we'll see what happens with that. And for that, I'm going to want to do another call credit spread because of the prices of the option. That's why I want to do a call credit spread. Actually, for this, I'm still going to be bearish, and I'm going to go ahead and just do a put. Just do a put. I would do a put. And so I'll pick an expiration not too far. You can do the next one. I would maybe do the next one October 15th. And because of the prices, I'm going to be a little bit more out of the money. It's a little risky, I know. But for this, this is a put, so we're profiting when the stock drops. I'm going to go ahead and I'm going to do 30. All right, so you see this delta is really low. Probably because it's further out. Well, so this one, okay, you can get the 35 because it's at 36 right now. You can buy a little closer to where the stock price actually is. A little closer, it's at the money. Your delta is going to be higher, but it's going to be, the max loss is going to be $280. And then if you wanted to, you know, spend less, you can actually buy 3 of these. But the delta is still very low on this one. I actually probably wouldn't want to do this one. But the most you can lose is 150. So for me, I'm probably going to stick with the 35. Yeah. All right. And the last play is going to be SNAP. That's Snap, okay? Everybody knows what Snapchat is. You get on Snapchat. Well, does anybody use Snapchat anymore? I guess you know what Snapchat is. So this is actually a camera company behind the Snapchat app, trading at $74.76 right now. So you're gonna see from the stock chart that overall we've been in an upward trend since about May. They had positive earnings back in July. You saw that price shoot up. You saw that price go up. What? It went from $61 all the way up to $77. Golly. Since about late August, it's definitely been trading in between the zones. So you'll kind of see some resistance right here at around 76, 77. And we've hit this support area 2 times down at 69. 69 and fine, hey. So right now it's kind of settled in the center of that. that. And after testing that 69 support back on the 13th, you know, it kind of bounced off of that. So as far as news goes, Snap just announced on Friday that it's going to roll out a new online game with their partner Zynga named Revamp. Okay, so this is going to be kind of a new game. It's multiplayer, it's interactive. I think that this is going to be good for the company because it's going to keep users on the platform for longer periods of time. And then that's also, with that time increasing, that'll increase their ad revenue too. So going into next week, you can be bullish or overall neutral because of the clear trading zone. You can do a call and, you know, see if it continues on this little uptrend, this little brief uptrend, and get up to that resistance that we've had at 79. So it might have a few dollars that you can squeeze out of it, but something that might be safer would be to do an iron condor. So you can do an iron condor. You can set your limits around where you kind of see your support and resistance zones. And like I said, as long as the stock doesn't touch those prices, then you'll be good. All right, so as far as the calls go, these aren't too bad in price. It's okay. So going into next week, if I was going to, you know, definitely be bullish on this, you would want to see it continue above that 75. So if it continues above 75, that's a really good indication that it's going to continue on that uptrend. So that's what we would want. It's at 74 now. I mean, you can, the 75 strike price. The most that you'll lose with this one is 180, and the max profit unlimited. You can't beat that. I'll probably do October 8th, and you can pick a strike price up in the money. You know, at the money, you could be 75. Pick the 75 strike price. It's going to be about 300. You can move out a little bit to 76, and the most you'll lose with this one is 278. So it has a pretty good delta. Implied volatility is okay. Theta looks good, so that looks great. But as far as doing a iron condor, I'll just go down here, iron condor. And for the condor, I'm going to pick something a little bit closer. This is one of the iron condors from Webull. So you'll get a $150 credit. And with this play, you're going to be profitable as long as the stock closes in between $71 and $79. So that kind of gives you a little bit of room for it to drop a little bit, but right now it is on that uptrend. So as long as it closes in between that, by the time it expires on the 24th, then you'll be okay. And you don't even have to hold it until expiration. You can actually exit early. If you're profitable, you'll just buy back in and you'll keep the difference in between the credit that you received and the amount that you pay to close it. I've learned that good traders only have 4 different results when they trade. It's either going to be big wins, small wins, a break even, or a small loss. So if you want to be a good trader, make sure that you check out this video on how to set up your stop losses for your options, okay? It's going to make all the difference for your trades. And hey, what more do we have to lose, okay? Except for more profits. But hey, this is insurance on your trades, and just make sure you check that video out.